from the studios of Farm Journal Broadcast.
Coming up on Ag Day, new tariff recommendations are putting ag on alert, plus calculating cattle prices for 2018. And agribusiness tracking down corn demand.
You would think U.S. being the biggest provider of corn in the world, and yet our world-ending stocks still went lower.
Machinery Pete is looking at combine prices and fueling an Olympic athlete.
Ag Day, brought to you by the Chevy Silverado, the most dependable, longest-lasting full-size pickups on the road.
Good morning, I'm Clinton Griffiths. It's President's Day. There might be a good chance your kids are off from school, so you might want to give them some additional chores to do. Just saying. Well, the grain markets are also closed in Chicago, but topping our news, tough talk from the U.S. Department of Commerce as it recommends slapping tariffs on aluminum and steel imports. The Commerce Department says imported aluminum and steel threaten U.S. national security and is urging President Donald Trump to impose tariffs or quotas to boost American production. Commerce Secretary Wilbur Ross proposing a 24% global tariff on steel shipments coming into the country and a 7.7% duty on aluminum imports. Ross says higher production levels of steel and aluminum, especially by China, has driven down prices and is hurting American producers.
They specifically mentioned China, that they produce nearly as much steel as the U.S. does on an average month that the U.S. produces in a year. So they're singling out China in this report.
Farm Journal Washington correspondent Jim Wiesmeyer says the risk now is how China responds. The country has already been accusing the U.S. sorghum industry of dumping that grain at unfairly low prices, but an even bigger threat to U.S. ag would be soybeans.
I would signal that what I'm going to look out for is whether or not in the next few months China books ahead U.S. soybeans to get a lot of beans on the books, or if you start to see after any announcement is made, if China is singled out, China announces some retaliation, but then you start seeing export sales to an unknown destination of big quantities, and that country would likely be China.
President Trump has until April 11th to make a decision on whether to assess tariffs to steel imports and April 19th on aluminum shipments. Several other nations were targeted for potential tariffs, but China is by far the largest steel market. Analysts say U.S. tariffs could also inflate manufacturing and consumer prices here in the U.S. Changes in steel or aluminum prices likely to impact equipment makers. The world's largest farm machine maker, Deere & Company, rolling out its full-year sales forecast. It's projecting an increase of nearly 30%. Net revenues forecast to rise by about 25%, while net income for 2018, excluding the impact of tax-related adjustments, it's forecast at $2.85 billion. Now that's higher than the average analyst estimates. And this might be the biggest news. Deere projecting worldwide sales of ag equipment to increase by nearly 15% and 10% here in the U.S. and Canada. Missouri John Deere dealer Ag Power says the surge in equipment trends came earlier than expected.
I thought we were still maybe 12 months out, and they're coming back a little sooner than I thought. We had really good yields in our area last year, though, so I don't know if it's the bushels or we know the price wasn't there, but I would say the bushels helped a lot where we are.
Analysts say it's not uncommon for net farm income to track with Deere sales expectations. Cattle prices continue to remain relatively supported. However, at the recent Cattle Industry Convention and NCBA trade show, analysts there say several factors are looming that could impact those prices for 2018. Betsy Gibbon reports from Arizona.
After suffering major losses in 2015 and 2016, it's a healthier time in the cattle industry, and stronger prices are here with it.
But certainly you're seeing some margins in the grain.
Absolutely. Yeah.
It's a good feeling, isn't it?
It's a very good feeling, yeah.
Cattle Facts saying 2017 is considered the second most profitable year in the cattle industry. Some even seeing similar profits to the highs of 2014.
I think it's comparable. I think every operation is different, but there's some instances where it's the same or even a little bit better. 18 should be favorable for most producers.
However, USDA's January cattle inventory report is also showing continued growth, but at a slower rate due to a smaller number of beef replacement heifers, down 4%.
People are taking this as a sign that herd expansion is over. I think there's still room actually for some potential expansion in this. If you look at the replacement heifer number as a percent of the herd size, it's still above the long-term average.
Since that replacement heifer number is lower, some feel it's a positive for price, even though the herd is still growing at a slower rate.
Overall, we saw a little bit smaller inventory of cattle than what had been expected. So I think overall that puts a positive tone on prices being maybe a bit stronger for 2018.
For the feed yard operator, we think they'll get along very well here through the first quarter, and they are. You know, they're very profitable. When the year's all said and done, they do run the risk of being a little bit in the red.
But I still think we have a lot of risk from an abnormally wide price swing from spring highs to late summer, fall lows.
The price debate comes at a time when the central and southern plains are battling drought conditions with less forage, wheat, and hay, making some wonder if cattle could be next to shrink.
We've had lots of cold weather this winter, so we've used a lot of hay. We could find ourselves in a situation if nothing changes where spring doesn't come, we don't have any real forage stocks to work with, and that means we could get into a situation of maybe being forced to liquidate cattle very quickly.
Even more worry for me than the drought monitor is the risk of excess carcass weights and what that could do for total beef production numbers.
Our forecast this year is to harvest 800,000 more cattle than last year on the Fed side, which will be 3 million larger than the lowest spot there in 2015. We haven't changed our kill capacity since 2015.
USMEF says 2017 was a record-breaking year. Beef export value surpassed the $7 billion mark. Last year's totals were 2% higher than the previous high set in 2014.
But what's more exciting is our economists are forecasting going into next year that we're looking at 6 to 8% additional growth on top of this record this year. So we're excited. There's a lot of opportunity out there. We just have to harvest it.
We continue to move beef exports along. Demand stays healthy. It's no surprise that we have large supply right now. But if demand stays healthy, I see no reason why we can't continue to hold this market up as we move forward.
I hope record demand will continue and good prices will stick around with it.
I don't know about 2018. Maybe it won't be this first 6 months of this year, but I think going into 19 is going to be a little bit tougher.
Reporting for AgDay, I'm Betsy Gibbon.
All right, thanks, Betsy. Trade uncertainty like renegotiations of NAFTA and the South Korean Free Trade Agreement are also a wild card for 2018. Now, Purdue ag economist Chris Hurt expecting finished cattle prices to average between $118 and $120 per hundred. Feeder cattle are expected to be a bit lower than 2017 in the mid to low 140s. Our own meteorologist Mike Hoffman is back in the studio with us this Monday morning. He has today's crop comments.
Good morning, Clinton. Robert Goodson of Helena, Arkansas sent us this picture. He says drains are working, but 5 or more inches of rain in the last week or so is overwhelming them. He says so far it's way too wet to even consider burn down options for these fields. Robert is a county extension agent, by the way, for the University of Arkansas. And from rain to snow, parts of Montana getting absolutely dumped on late last week and over the weekend. Jody Thompson sent us this picture to Facebook from Columbus, Montana. She says this was their calving lot at 2 a.m. Looks a little bit cold there. And taking a look at the estimated rain from last week, you can kind of see it's mainly been in the southeast and on up into the mid-Atlantic. Heaviest amounts, some of that 8 inches plus, parts of the panhandle of Florida. We'll talk more about your forecast for the coming week and the next 30 days coming up. But first, here's some hometown temps.
Ag Day, brought to you by new Delaro fungicide for corn and soybeans. Achieve personal best yields.
When we come back, we'll be talking about corn demand and whether it can support prices, plus Machinery Pete is here. And later, it takes hundreds of people to help feed the Winter Olympians. So why is food so important to peak performance? That story on In the Country. Corn prices and exports seeing a bit more action as of late, but can demand help keep those markets moving? Tyne Morgan asks a question from the road.
Here now with Jared Creed of JC Marketing Services. Jared, when we look at corn, we know demand's been much better on the corn side than it has been on the soybean side, but is that demand enough to really support prices?
Sure, absolutely. So last year we had a record U.S. corn crop, right? You would think U.S. being the biggest provider of corn in the world, and yet our world ending stocks still went lower. Over the course of the last couple of years, our demand has been ramping up year after year, and finally we're starting to use more than we're really raising on a yearly basis. Right here and now, when we're talking about an acreage mix of next year and the current demand base and a little bit of problems in Argentina, some speculation on drawdown of area in Brazil, I don't know if we've had this much positive information in corn for several years.
But when you say this much positive, I mean, let's be realistic about price. Are you looking at, of course, north of $4, but how far north?
Just because you have positive information, we still have to work through that glut of grain from last year. And you got to remember that all those trades come to the Board of Trade together. You have to have a buyer for every seller, and the farmer's the biggest player in this market today as the big long of physical grain. So as soon as we can find our way through those stocks, continue to find a buyer, I really, I want to keep things realistic. Is 50 cents in the cards? Let's not talk about that type of stuff, but I think we do have a chance to push December corn futures above $4, maybe even get a crack at $4.10, $4.15 in a seasonal move.
Real quick, only about 30 seconds. That's new crop. What about all this old crop?
Old crop, the market has done a pretty good job of maintaining a range of 350 to 360 on a cash front.
Yeah, it's not been pretty.
I don't know if you're going to see big moves there without a huge issue of an unknown today. On a top side of futures, you're looking at 15, 20 cents higher from today is what I feel comfortable talking about.
All right, Jared, thank you so much. We appreciate it. Let's take a quick break here on Ag Day, and then we'll be back with a check of weather.
To contact Jared at JC Marketing Services, call 402-680-1744 or send him an email at creedjarrettm@outlook.com.
Uh-oh. Welcome back to Ag Day on this Monday morning. Meteorologist Mike Hoffman here looking at the jet stream. And Mike, we talk a lot about patterns and seasonal patterns. Have we changed? Is this a different pattern?
Yes, but I'm not sure if we go back to the one from 3 or 4 weeks ago with the trough in the east or not. There are still signs that it'll happen at some point in March, but we're not sure of that. So at least for now, this is the pattern we're looking at, with a ridge in the southeast keeping you folks dry and warm in Florida and a little bit farther north from there. But a lot of moisture coming up from the Gulf in this situation, and a lot of moisture coming up from the Pacific, which is good news for the drought areas. I'm not sure you get a lot of rain over the coming week, but at least you have potential to get some from time to time. I think it'll generally be on the light side, but we'll have to wait and see how that works out. But you can see the jet stream overall continues to have this weakness off the California coast, occasionally trying to cut off something there. The ridge holding steady through the middle of the week. Heading through the end of the week, the ridge is still holding in the southeast, and we see the trough digging back into the west again by Friday. And on into next weekend, you can still kind of see that pattern. At some point, though, we may see this suddenly start to dip into the Great Lakes and the northeast the following week, but I'm not sure how quickly that's going to happen. It may be 2 or 3 weeks before that starts to try to happen. So for now, trough in the west, ridge in the east. Here are the temperatures this week. Obviously that follows the trough in the west and the ridge in the east. Above normal from most of Texas, Great Lakes, up and down the eastern seaboard. And from the Dakotas right on down to Baja California, including all of the west coast, that should be below normal. Precipitation for this coming week then, I'm going above normal from Louisiana, eastern Texas, all the way into the Great Lakes, mid-Atlantic, northeast. Below normal in Florida, below normal from Kansas, northward through most of Canada. I am going normal for the southwest, even though we are going to see some of that moisture coming up from the Pacific. Doesn't look like a major storm system coming, so we have a couple of little ones coming, so we'll go near normal for you. I know that's not a lot, so let's hope you go a little bit above normal. That would help you out somewhat anyway. Here are the 30-day outlook for temperatures over the next month. Above normal right up and down the far eastern seaboard, especially Florida. And above normal mainly for Mexico and the far southwest, but below normal from northern Oklahoma up through the western lakes, northern plains, northern Rockies, through much of central Canada. As far as precipitation over the next 30 days, I'm going above normal also Louisiana into the eastern lakes, mid-Atlantic. Above normal in parts of the Four Corner region, also the northwest, with below normal the northern plains, Florida, and Nevada and California. That's a look across the country. Now let's take a look at some local forecasts. First of all, Baker City, Oregon, a mixture of sunshine and clouds today, high of just 26 degrees. Russell, Kansas, partly sunny and much chillier, high of 46. And finally, Mansfield, Ohio, cloudy and breezy with rain at times, high around 60.
When we come back, Machinery Pete talks about combine prices from the National Farm Machinery Show in Louisville. And later, the staggering amount of food helping to fuel the world's Olympic athletes.
Ag Day, brought to you by Top Third Ag Marketing. Farmer first with a plan for every market.
Machinery Pete spent last week at the National Farm Machinery Show. He joins us this morning with a look at combine sales.
Hey folks, Machinery Pete here reporting from the National Farm Machinery Show in Louisville. Always great fun to walk around here, hoof it, and see all this new shiny equipment, but you know me, I'm thinking used equipment and used values. Now on the topic of combines, some interesting things lately, seeing some very strong pricing. Last week, actually a week ago Tuesday, online farm auction in Michigan. This 2013 John Deere S660, 600 engine hours on it, sold for $206,800. Folks, that's the highest auction price I've seen on a 13 model S660 in 35 months. Now a week ago Friday, on the red side, we saw this 2006 Case IH 2388 combine, 1,649 engine hours on it. Farm Auction Central Iowa brought $81,000, second highest auction price I've seen on an 06 2388 the last 34 months. So again, if nice condition, these used combines have been pretty strong. And in fact, if we go back to the S660s, the average auction price, the last 15 2013 S660s, $166,397, and the average dealer ad price is just over $188,700. So very close difference between the auction and retail price.
Olympic athletes run a finely tuned machine to stay in peak performance. Up next, we'll see what they're eating at this year's games.
Ag Day, brought to you by Prosaro Fungicide from Bayer. In the country, sponsored by Kubota. Tractors, hay tools, utility vehicles, mowers, and more. Visit KubotaUSA.com today.
Food is a big deal for Olympians, and it's usually complicated. These diets are very specific, highly calibrated fuel to put in their bodies for energy, for health, for warmth, for a physiological or psychological edge. It's a big part of what makes them excel. Korean food is some of the world's finest, but it's very different from what many foreign Olympians are used to. The U.S. team has its own chefs and dietitians, as well as 2 nutrition centers at the games. And then there's the food at those athletes' villages. Nearly 500 chefs and cooking assistants provide a combined 18,000 meals per day. The amount of raw ingredients used each day to feed the athletes is a staggering 1,500 pounds of beef, nearly 1,000 pounds of eggs, 440 pounds of bacon, nearly 400 pounds of chicken, 7,000 pounds of fruits and vegetables, 15,000 pieces of bread, and 800 pizzas.
What I recommend for athletes right now in competition mode is to be as safe as possible. You know, this might happen once in a lifetime. You don't want to blow it with just having an upset stomach because you've eaten something that's different to what your body's used to. So I say as soon as the games is over, go at it. Enjoy, be adventurous.
They are taking care of us, and we are able to have proper nutrition. There's so many people here behind the scenes making sure that all the athletes are well fed, prepared for all of their events. So, you know, we're super lucky. And as far as Korean cuisine goes, if you guys haven't been to Korean barbecue, I totally recommend it.
The Americans shipped over 85 pallets, each about 6 feet tall and 3 feet deep and wide, filled with pastas, sauces, peanut butter, grains, and plants like quinoa. An average woman there at the games, an athlete, will need 4,000 calories or more per day to train and compete. A typical man needs about 7,000 calories. Now that is a lot. And that's all the time we have this morning. We're sure glad you tuned in, started your week and your day with us. From Mike Hoffman and all of us here at AgDay, I'm Clinton Griffiths. Have a great day.
AgDay, brought to you by Ram Commercial, America's longest lasting heavy-duty pickups.